Again, everyone, just going to do a quick one here. Strategy Clinic with Vantage here, 7th of July. I'm here to try and help you with your trade strategies. If you have any questions, if you have any trading ideas that you would like, or trading strategies that you'd like me to give my viewpoints on that, I'll be more than happy to put it into the chat. I'll be here to help you with that as well. I'll be looking into some trade ideas or trade setups that I personally looking at, and I'll be happy to share that with you. As usual, a quick disclaimer: any information shared in this video or in this session are solely expressed in the presentation. On the following slides are solely those of the presenter, myself, and not necessarily those of Vantage, and are solely used for educational purposes. And nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading. All right. So I am part of the team here. I'm one of the prop traders together with Desmond, Cassandra. Sometimes she jumps on, Melanie and Joanne there. What we'll be going through today is your trade ideas and helping you with your trade strategies. So, cool. Thank you all for joining us today. Let's go. As you are looking towards your possible trades or strategies, if you want to share that with me, I'll be looking into some trade ideas. While I wait for you to type that up, I'll share with you my view here of some currency pairs. The Aussie dollar here, I was looking at it. Aussie dollar, I looked at on the H4 time frame. So as I was saying before, my trades, generally, I look at first the economic news, the fundamental reasons behind whether price should be heading higher or lower, right? I look at the news, the economic data to get an idea of whether price should be heading higher or lower. Then after that, I look at the trend. I want to enter a trend following trade. Then following on with that, I'll look into the trade ideas in terms of, whether it's going to continue lower or bounce back up towards the different directions based on the fundamental reasons and the trend following trades. So Aussie dollar here on the H4 time frame, as I was saying, I'm looking at this 6760 level. All right, I got your request for a couple of trades there, Deborah. I'll get to that shortly. Let me just finish this Aussie first. So Aussie bounced off this 6769 or 6770 level 1st of July, again on the 5th of July, and then again on the 6th and 7th of July. Seems like it's forming a good base level here, a good support level here, despite the Aussie dollar being weighed down with the global recession or possibility of a global recession and downward movements of commodity prices. My overall view is still possibly towards the downside on the Aussie, but that strong support level seems to be holding. What I'm also looking towards is, if I zoomed out, you can see that this is a level very low. Even if we went to the daily time frame, it hasn't been tested lower for a very long time. This is way back in June 2020, right? So a very strong support level at this point. What I would be looking for, although I'm looking for further downside, is whether the Aussie dollar could go up, retrace upwards, correct towards the upside before turning back down again. So what I'll be looking for here is that move. I think that we could see a bit of a repeat of what happened here on the 5th, with a support level and a resistance level there at this 0.6878 level. What I'm looking for is, can the Aussie dollar track towards the upside, hit that 6877 level or 687 or 80 level, reject that level and turn back down towards that 6768 support level. So two ways of looking at the Aussie dollar here on the H4 time frame. It's either going to sit across and turn down, not a lot of downside potential there, or what could happen is for this to push higher towards that 6880 level, reject that resistance, bit of a repeat of what happened here on the 5th of July, and turn back down towards the downside. This would mean that we're going to have to see some dollar weakness apply, or a recovery in the Aussie dollar to push that up before turning back down again, right? So my view on the Aussie dollar could be that push back up towards the upside, right? Terrible drawing, and then after that, that downward move again. So that's what I would be looking for in this scenario. Okay, neaten that up a little bit. So that's the Aussie dollar. I think that we could see that push up. Then, now I've got a request here for the US CAD long, New Zealand yen short. I'll jump straight to the US CAD first. All right, US CAD long, be very careful there. What I was actually looking at, I've been quite keen on the US CAD. Things to pay attention to here is that we have a key support level at this 1.30 level. Okay. We have a key support level here at about 1.30, and it is testing that right now. So at this point, that push upwards, that big push upwards was because of dollar strength pushing the US CAD from that 1.2850 level towards that 1.3072 level. But what we've seen since that big push upwards is very limited upside. We haven't seen it try to break that point, and we've seen that consolidation. What I anticipate here is that we might actually see this track back down. We might see this track back down because, like we were just looking at the Aussie dollar, we might see some dollar weakness come back into play. And also, the Bank of Canada has actually been quite hawkish, or markets have been considering the Bank of Canada to be quite hawkish with a potential 75 basis points rate hike to come from the Bank of Canada. If the Bank of Canada, or if the sentiment does increase in that fashion, anticipating a rate hike of 75 basis points, then we're going to see the Canadian dollar strengthen back down, possibly towards that 1.28 or 1.2800 support level again. The way price is moving right now, testing lower, I think this, I wouldn't be so keen to get into a long. What I would actually be looking for is if price can go down, break below that 1.30 level, break as in price to close below 1.30, then possibly look for that downside. A bit like a repeat of what happened here on the 24th, where it tested and rejected. You can see that tail there, tested and rejected that resistance of 1.30 and tracked down. And again here on the 20th of June, where it shot up, pretty much similar to what happened here recently, shot up, and as it broke below that 1.30, we saw it track down, in this case, down towards that 1.29 before rebounding and then rejecting that level again. So, Deborah, there, thanks for your question on the US CAD. I think that the upside might be limited on the US CAD. Right now, it looks like possibility for a reversal, especially if we do see some weakness into the dollar, and also if the markets starts pricing in higher likelihood of the Bank of Canada increasing rates aggressively. Before we go on further, before we look at the New Zealand yen, in that, let's look at the dollar index as well, right? The dollar index here, what has happened over the last couple of sessions, or since the last couple of days, was that the dollar index shot up from this 105 level all the way. It actually hit 107 before tracking back down again. Right now, sitting at this 106.94 level. I think that we might not see too much excitement on the dollar index for today as markets set up into or stay out or stay a bit poised for tomorrow's news events. Tomorrow we do have a lot of news events to be released. We do have the US NFP to be released. Let me just bring that up. Right, so tomorrow we do have, I'll just show you there. Tomorrow we do have the US NFP to be released here. As we, looks like a small drop from a 390 to a 275K. Small drop there together with the average hourly earnings and the Canadian employment numbers. So if we do see a weaker than expected non-farm payroll data release, what we could see here is the dollar index pushing lower. It's at a historic high. If I went to the weekly time frame, you can see that it's been hasn't reached this 106 level since 2002. So it's almost a 20-year high at this point. We should anticipate some volatility at this level, a retrace, a possible deeper retrace back down, especially if we do see a weaker than expected non-farm payrolls numbers tomorrow. So for tonight, I think that we might see markets still a bit more conservative in consolidation, maybe a little bit more weakness from the dollar as it retraces from this 107 back down a little bit, which could be the reason why we push the Aussie dollar, as we first discussed, towards the upside, and also possibly to drag the US CAD slightly lower from its current 1.03 level. So now looking at the New Zealand yen, do I have it here? All right, so I'll go find it. Right, so New Zealand yen currently, I like that trade idea. You had a New Zealand yen short there. Currently, New Zealand yen sitting at this 84 level. It's just recently tracked upwards from that 83.30 level. I anticipate that we might see this sit across, continue in this slight consolidation that we've seen. Why? It's because for the New Zealand yen to push towards the upside, what you will require will be for the New Zealand dollar to get stronger, right? So if I just did a quick view there on the New Zealand dollar. Oh, wait, not that one. On the New Zealand dollar here, it's sitting at this 0.6177 level. It's formed a nice doji there. It looks like it might be turning back down. Overall trend of the New Zealand dollar is towards the downside. What I'm looking for, again, New Zealand dollar being one of the commodity currency pairs, looks like it might be pushing back down towards the downside. As the commodity prices weigh it down, I'm looking for this to track back down towards that 6135 level. So looking at some weakness in the New Zealand dollar. And then if we look into the US yen, you can see that US yen sitting at this 136 level, trying to push up, but with limited upside as we see 136.60 as quite a strong resistance level. We've seen it reject this point. So if I drag this right across, 136.60 there, you can see that it's rejected this price level once on the 22nd of June, rejected it a couple of times here on the 29th, came close on the 5th, and doesn't look like it's coming close towards this price level. So with very limited upside on the US yen, I think, and potentially more downside on the New Zealand dollar. Jumping back to the New Zealand yen. Right, jumping back to the New Zealand yen here, we're looking at this possibly tracking back down. I don't think that we're going to see much upside in this case. We could see it come back down towards this support level. So trading down from that 84 level back down towards this 83.24 support level. Right, I hope that answers your question there, Deborah. With that, I think what's one really interesting trade I had been looking at, I've been stalking, was the euro dollar. Right, euro dollar. Great, super. I'm happy to have helped. Euro dollar, big downward move. We've seen that drop. If I zoom out, you can actually see that move from 107. This was in early June. We saw that big drop in June, and then after that, that big drop since 105 on the end of June, all the way down to right now at 101, 1.0190. Right. So at this point right now, all the talk about the euro dollar is, can it reach parity? What it means by parity is, can it reach 1.00? Can it reach this level here? Right now, with markets all pricing in or trying to trade it down towards this point there, it looks like the trend is pushing it down. We're going to see consolidations, a little bit of a spike before trading lower. The safest way to approach this will be for it to break interim support levels before looking for any potential downside. What I mean by interim support levels here will be for it to go past the recent low. So currently the recent low is 1.0170. Right? So I'll put that right across. I'd say that if it does break below if it does break below this point, this most recent point of 1.0170, then we could be looking at further downside on the euro dollar towards 1.00. Again, bear in mind as we approach very significant low points. This is historic low. The last time it got there, I think, was 20-something years ago. If it does break below this point, we're going to see a lot of volatility. You're going to see big spikes up like that. We're going to see this moves, right, which was about a good 80-something pip push towards upside before resumption towards the downside. We're going to see a big correction or retracement back up there, 50-60 pips before turning back down again. So although we still anticipate more downside, be extra safe, wait for it to break below a interim support level before trying to trade it lower. At this point, stay out, wait for it to break before trading lower. I wouldn't enter one trade and hope for it to go all the way down. I think that in this span between 1.0170 towards 1.00, you could break this trade up into multiple shorter term trades just so that you realize your profits before it does a quick retrace or big correction and then trade down again. So break up your trades, realize your profits quickly, and then we could, or the market is anticipating for the euro dollar to reach parity, maybe not in a quick hurry, but looks like it will get there in the medium to longer term. With that, anyone else with a question or a pair that you would like me to look towards? I'll be happy to help you with that. If not, I'll look at the pound dollar. So this was one of the analysis that some of our analysts have done. The pound dollar, we are looking at possibly further downside. I think that the upside potential on the pound dollar might be a little bit limited, right? We're going to see that test towards the upside. I'll move this chart a little bit. You can see there. We're going to see that test that 1.1970, possibly even towards 1.20. But the likelihood is that we're going to see a reaction at this 23.60 fib level, and also the 38.2 level. I think that we're going to see it come up towards this point, maybe at the top of this channel before turning back down. So overall view, I still look for further downside on the pound dollar towards that 1.18 level, towards the 1.18 level, but it needs to break, test higher and break this 1 point. I would say be a bit safer there. You want to candle to close below 1.1974. So at about 1.1960, you can look for that downside towards that take profit of 1.18. Right? We're going to see it, possibly going to see a lot more volatility on the pound dollar. One of the news that was just released before today's session, minutes before today's session, was that Prime Minister Boris Johnson from the UK has indicated that he's going to resign as PM, but he will be in place until they get another leader. But he has indicated that he will resign on the back of the recent scandals. So with the Prime Minister resigning, that could bring a little bit of uncertainty and instability into the UK economy, which could therefore see that weakness come back into play on the pound dollar. I got a question there looking at gold, XAU, USD. So let's jump into that. If you have any questions about some of the analysis I've done, please feel free to ask as well. So XAU, USD, gold here, it's actually done something that has been very different to what we have anticipated so far, is that with all the worries, all the concerns about, let's raise the hand. If you raise the hand, put it into the chat if you've got a question there, right? So gold has been performing a little bit differently than expected, with global recessionary concerns increasing, with anticipated demand decreasing. At this point, usually the shift towards reserve commodities would cause gold prices to shoot up. But what we've actually seen is that gold has been dropping. 1800 was a very key support level, together with this 1792 level. What I've actually seen was that it broke all the way below those, and it tested 1736 before now sitting at this, within this range of 1736 and 1750. So within this range, at this point here, this weakness in gold is primarily because of that strength in the dollar. As that dollar was climbing, we have actually seen gold dropping, usually with the recessionary concerns or ideas or concerns that a global recession could be occurring. We see gold strengthen. But what we're actually seeing now is that because the Federal Reserve has been, or is indicating that they're going to continue on with an aggressive approach to increasing interest rates, despite the US possibly heading into a recession. Despite the US possibly heading into recession, what markets are viewing it is that it's not going to be just the US heading into a recession. It's going to be across all major economies across the globe. So what's actually happened was that capital has been flowing not just to the dollar, right? It's not just been flowing to gold, it's also been flowing to dollar. And because of that, we're actually seeing more move towards the dollar, that big strength in the dollar, and gold dropping back down, right? So at this point, what I would say is that if I went to the daily time frame, you can see the next support level on gold. At this point here, about 1724. So not very far away from where we are now. I think that we're likely to see gold for today and even maybe for the medium term trade in this consolidation. Just slightly, maybe below 1750, between 1750 and this 1740 or 1730 level. At the most at 1725, within this range with limited downside. I don't think it'll break that point, or we might see it consolidate in this area before a possible move back up. How I approach gold is that I don't look at it in the short term. I don't look at short-term trades on gold. I look at more the medium and longer term trades. So I actually look at buying into value on gold rather than trying to short it down and buy it back up, because it's sometimes a little bit too much volatility on gold. So how I will approach this, or what I suggest to most, will be, watch it go down, trade something else, watch it go down, and then if it bounces strongly in this region, if it starts to bounce back up, then you can look into buying gold for it to track back up into the 1800s and possibly push higher as capital starts shifting towards the precious metals again as an inflation hedge, as a reserve commodity. So I hope that answers your question there, Kiptun. Gold might be most likely going to sit in consolidation at this range before looking like it might push or have big correction towards the upside. And this could actually happen quite quickly, especially if we do see a weaker than expected number on tomorrow's non-farm payrolls data release. All right, so good stuff. I'm enjoying the questions there. If you have anything else, please feel free to put it in. Thank you. Appreciate that. What else? US Swiss franc. Let's see what happens on the Swiss franc here. Swiss franc is right now sitting just above that 0.97 level, sitting just above that 0.97 level. If you are not sure what happened here on the 16th, 15th, and 16th of June, the Swiss National Bank surprised markets with a 50 basis points increase. So they were anticipated not to change interest rates, but they surprised markets with a 50 basis points increase, which caused a big, massive strengthening in the Swiss franc, pushing the US Swiss franc down from that 1.00 level all the way down. Sorry, I'm coughing a bit today. So all the way down towards that 0.9657 level. Since then, we actually saw a limited downside before that push higher, and this push higher is on the back of that dollar strength. The Swiss National Bank has also indicated, following the surprise increase, that they might be looking at further rate increases to follow, but any strength in the Swiss franc has been offset with that strength in the US dollar recently. So because of that, we've seen the Swiss franc push up to right now above that 0.97 level. What I anticipate at this point is we're going to see it sit at this level, at about this 0.97 level in consolidation, possibly push up a little bit, but I'm looking for any surprises, or if the Swiss National Bank does come out as planned with their rate increase, we could see the Swiss franc push down back towards that 0.9550 or close to that 0.9550 support level. So towards this point. So I'm looking for this move a little bit higher, but I'm looking for that selling opportunity back down from 0.97 towards that 0.95 support level. All right, any other questions? Anyone has any strategies that you'd like to share? How do you approach your trades? What else do we want to look at? Pound, dollar, Swiss franc, we've done that. Pound yen is actually really interesting. Previously, we were looking at trying to sell the pound yen down if it did turn down and break past this point. But with the way the pound dollar has been pushing back up, we could be looking for it to come up towards that 164 level. I'm looking for pound dollar to push up towards 164. I'll take that away just to clarify things. Right, towards the 164 level with how it's reacted there, or even 165. Bear in mind that pound yen does have very high volatility. We can see this move very quickly over a short period of time. But as we anticipated, pound dollar might be pushing up, but upside on the pound dollar could be limited. So what I'll be looking for is a reaction at about this 165 level, push up towards this point. If I see a rejection, I'm looking for a repeat of what happened here on the 5th of July, a rejection of this level to turn back down towards that 161 support level. All right. As we look at the pound yen, looking at the euro yen had that big drop, or has been dropping that significantly because it has been dragged down by the euro dollar. Right now, bouncing back up a little bit, approaching that 139 level. I would actually suggest at this point to possibly stay out of the euro yen a little bit, as we see this as a counter trend move at this point. It could push towards the upside, but for the euro yen to push towards the upside from this 130, slightly below this 139 level, for this to repeat, we're going to either have to see the euro dollar strengthen or the yen weaken significantly. And in this setting right now, both looks unlikely to happen. Right, both looks unlikely to happen. So what I'm actually looking for is a rejection of 139, or for it to move slightly higher again, and a possible rejection at about 139.80. So how it reacted here on the 14th of June, how it broke from this point here on the 16th of June, again here on the 1st of July, and most recently how it broke strongly from the 5th of July. I'm looking at whether the euro yen could track higher towards the 139.80 level, reject that point, and turn back down with the immediate target here at 137.70. At 137.70. Sorry about my coughing might be a bit disruptive, but can't help it. Should be better soon. So with that, on the euro yen, looking for it to push higher, set across or push higher before tracking back down towards that 137.70 level. Any other pairs, any other questions you would like me to look at? What do I think of Bitcoin and Ethereum against the dollar? Let me find that. There we go. Unfortunately, my overall view of Bitcoin and Ethereum is that nothing exciting happening at this point. Nothing exciting happening at this point. Why? A lot of the attention has been shifted. We saw massive attention on the cryptocurrencies, back in early June, early June here, where we saw that big drop, as we saw a lot of cryptocurrencies lose the peg or drop significantly. But what you might have noticed now is that the news has dried up. News has dried up a little bit, which also resulted in price right now trading in a relatively wide range, with price trading between this 1800 level, or 18,000 level, sorry, and also this 21 or 22, almost 22,000 level. So I anticipate that Bitcoin against the dollar is likely to continue within this 22,000 to 18,000 level, with no real direction, sitting in consolidation. Only likelihood is, if you're trading it in the short term, is to trade that range. Only if it breaks out of this 22,000 level, then we could see a stronger recovery towards the upside. But with all the bad news, it only takes a small bad news to push Bitcoin below 18,000. If it does break the 18,000 level, then we're going to see significant downside. Tomorrow's news, I don't think it will affect Bitcoin too much. It's an employment number, but it's not a big policy number there. So I don't think it's going to push prices on Bitcoin too much. And also because we have quite a big range here between 22,000 to 18,000. It's quite a big range. At this level, I don't think we're going to see it move too much. Right? So sit in that horizontal fashion. What you might get is a lot of chatter if it does shoot up from 20,500 here towards 22,000. There'll be a lot of talk about recovery, but stay cautious unless it breaks strongly above 22,000. I would say that it's still in a horizontal fashion. With that, Ethereum as well. Ethereum has been a little bit of a wider range. So the lowest point there at 915, and then with that upside there at about 1,266 or 68. Trading within that range. A little bit tighter range will be at about 1,000 there, 1,011 or 1,010. So what I'll be looking for, same thing, right? Bitcoin and Ethereum does move in a relatively correlated fashion. So I think we're going to see this sit right across. Again, that big downward move has pushed prices down, and sitting in consolidation now. I'm not anticipating a big push towards the upside. Likely to trade within this range. Likelihood is for further downside rather than a big push towards the upside. Hope that answers your question there again, Deborah. Good question. Thanks for asking that. Anything else? With that, great, super. With that, I'll add on to that is that the US CAD right now is testing a little bit lower. Be extra careful. As much as we do have the non-farm payrolls tomorrow, we do have Canadian employment data to be released tomorrow as well. So we're going to see a little bit more volatility there. I am still looking for a good close below 1.30, and then looking for that immediate target of 1.2850. It's quite a big drop. I don't think it'll happen very quickly, but I think that we could see possibility of that forming up. right? So I hope you had a good session. I hope you enjoyed today's session. If you have any trading strategies that you'd like me to look towards, I'll give you my pointers or ideas about. I'll be happy to do that. And then lucky last. Let's look at one last pair before we end the session. Anything that you want me to look at before we end the session? Last pair, Euro Pound, right? So why Euro Pound is because we've seen the euro dropping so significantly. We've seen the euro dropping, now looking at a possibility of parity. We've seen the pound dollar dropping, but staging some sort of a recovery right now. What you could be looking for here on the euro pound is possibly further downside, especially as it approaches this 0.85 support level. You can see that if I zoomed out, move this down a little bit, this 0.85 support level is quite a key level. We've seen it test several times in June. It's approaching now again, but we've seen that whenever it breaks, I'll drag this across, is whenever it breaks this 0.85 level, we can see that push down towards 0.84. We can see that push down. And if we do see that downward move continue on the euro dollar, that could pull that euro pound down towards that 0.84 support level there, right? So this will be something that I'll look forward to as well. Price needs to go down, close below that 0.85 level before we could look for a strong sell signal towards the downside, towards that 0.84 level. Right, so with that, I hope you, do you have any questions about that? I hope you enjoy the trading strategy, the strategy clinic today. Again, please tune in for the next strategy clinic. And if you do have any questions or you have any strategies, trading strategies that you'd like us to look through, we'll be more than happy to guide you through that as well. I hope that you look at your trades, trade well, trade safe. Remember, before you jump into any trades, do your due diligence, make sure you manage your risk profile properly, your risk proportions properly, and I hope to see you again. Take care now. Thank you, Deborah. Bye now. See ya.